Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. What I would like to do today is share with you two companies that are making use of AI, generative AI. And the two companies are both in design side of things. They have different products. They're not directly, rivals or whatever. They have different set of customers. One tailors for professionals, people that are doing creative things, the videos and YouTubes and designing images and all of that basically side of things. Okay, I'm talking about Adobe. So that company sells all the Adobe products from Photoshop to Adobe Premium to Dreamweavers and everything else. And the other one is Autodesk, and that company focuses on basically working with customers that are in the architect side of things, okay, designing and so on. So I'm gonna show you a bit more information about the two companies. But what they're doing right now is one has been basically using generative AI for quite some time, and the other one is now started recently. So I want to show you their products. I want to talk about the business model. I want to talk about, give you as much information as I possibly can, and then talk about the financial side of it. If you enjoy this type of content, okay, and you actually like the channel or whatever we're doing here, please just like the video. That's the first thing I want you to do. Secondly, I want you to subscribe to the channel, because about 50% of you guys out there are not subscribed to the channel. So that will really help the channel to, inshallah, reach more brothers and sisters out there. And if you can, okay, and that's if you can, capable of doing it, okay, then hopefully you can join us on the Discord. The Discord gives you access to a lot of brothers and sisters in there that are actually talking about amazing things and what they're doing every single day and helping each other without even me contributing as much, okay? And I am, of course, contributing. I'm doing quite a bit there, but majority of the discussions is just them. And then you've got access to all the dividend trackers, ETF trackers, and so on, the Sharia compliant investing ebook and so on. And now I've created a new daily watch list where basically you can tell me any of the stocks that you want to add in there, and I'll add it for you based on the information from Seeking Alpha as well as Morningstar, which is subscription based and so on. So yeah, inshallah, basically that's the plan. But let's have a look at the first company. Autodesk basically engages and designs of software and services. Its products basically include all the types of products that are used in order to design basically design side of things. From architect uses this company, the products this company has, engineering, constructions, design and manufacturing, media and entertainment. So they have a wide range of customers that use their product, okay? And one of the things that I love about this company, and like I've always said to you guys, is in 2013, all right, their recurring revenue was about 41%. Right now is 98%. And that's absolutely wonderful thing to see. And the reason I said basically this recurring revenue is quite good is when a company does that, that means their customers are locked in for the long run. Okay, they're buying that product for 5-10 years, and they have paid for their subscriptions, and then they just carry on using it as long, and the company updates, of course, and so on, and they are locked in for a very, very long time. And as you can see here, you got the long-term remaining performance obligations as well as the current. So this is basically what is happening now, and that is the long term, okay? And as you can see, it's actually doing well. Like right now, they have a lot of companies, okay, that are locked in for the long term of obligation, okay? That means they paid for 5 years, 10 years, or whatever it is. Couple of more things about the company in terms of where they are. They're worldwide company. They have loads of different types of products, so they don't actually just focus on one customer base, okay? And as you can see there, by customer size, you've got about 40% that comes from large companies, then you've got about 14% small companies, and then 46% medium companies. So it's a very well diversified if you think about it. Look at their revenue from 2018 to right now. It has been growing basically massively, which is from about 2 billion to right now about basically $5 billion. The margins are improving. So the non-GAAP and both GAAP and non-GAAP are actually improving from basically -5 to -25 to right now about 20% or 36% if you like. And this is what they have right now, okay? So they've got the Fusion 360, which includes all the software here, and that subscription pay. So these companies pay subscription every single year to have access to all of these things, instead of just paying from 5,000 to 50,000 to actually have those whole products and so on. Right now they can just like what Microsoft has been doing for the last whatever years, okay, the Office 360, where you got the whole package. That's basically what they're doing as well. So this is actually really good to see from this company. And the reason I actually picked this company, the Autodesk basically AI lab uses basically an AI powered design tools. And this is what the company is actually been working on for quite some time. It is not something that they came up in just this year or last year. They have been doing the AI empowered design tools for the last few years for their customers, just to help them build this one software where basically the company can basically offering the tools to be able to basically help them, their customers, to be able to create the designs that they're after. Okay, so they've got the machine learning side of things. They can give a lot of data, and based on that data, then they basically get design suggestions and so on. Okay, so you can type whatever you're looking for, whatever design you want it, and basically the AI lab can actually then help that customer to be able to build basically the products that they want to design. So now let's have a look at the information, the basically their data. Okay, and that's the most important thing for us as customers, for us as investors. What we want to see is that, okay, the great the company has a recurring revenue, they're using AI, they are the basically company to go to when it comes to anything to do with entertainment and media, the architect side of things, the engineering software. But now what we want to see is, can we actually invest in this company? Is it good company? Is it actually a well-run company? And the question for me is yes, and I'll tell you in a second. Okay, as you can see right now, if the price is $200 per share, EPS of $4, market cap of $43 billion. So it's not a huge company, still small. It has a wide economic moat, but beta is quite high right now. Current PE is almost 50 right now. In comparison to the sector and the S&P 500, that seems very high. But when you look at the forward PE, it's actually only 27. And the 5-year average is 64 PE. So based on that, that seems basically very cheap. Price to free cash flow just about 20, and the PEG ratio below 1.5. Now, because it's a tech company, because it's a high growth company, I will say that this PEG ratio is very important, and the fact that it's just below 1.5, it's actually not bad. That tells me it might be reasonably priced right now. Free cash flow right now 2.19, free cash flow margin of 43, and free cash flow yield of 5%, which is absolutely huge. Profit margin 17%, return on operating margins basically 19%, return on invested capital about 90%, and total return in the last 10 years we're looking at about 17.5%. Return on invested capital we're looking at about 23%. Last 5 years they grew that revenue about 20%. Current ratio just below 1, but they do have some cash if they needed to cover any liabilities. Next year they're expecting the earnings to grow at least about 14%, then about 15% after that. According to Simply Wall Street, it's actually quite cheap right now, 23%, 25% undervalued at the moment. According to Morningstar, it's actually 18% discounted right now. According to TipRank, it's about 15% upside from where it is now. Remember, these guys are using an analyst basically for the next, and their target is like in the next 12 months, whereas these guys are using the intrinsic value of the business. Okay, and they're saying it's a buy, moderate buy. And in terms of Sharia compliance side of things, we're looking about 100% from business side of things. Interest-bearing debt is quite low. Interest-bearing security is quite low. They have been buying back their shares up to 2019. Then they started diluting it. Again, this company uses all stock basically buys when they actually acquire new businesses. So that's probably why. And then they started buying back again their own shares. So I'll tell you exactly what I'm going to do towards the end of the video. But the next company, like I've already said to you guys, is Adobe software. Adobe basically has loads of different types of applications out there that we've been using as a company for a very, very, very long time. Currently trading $521 per share. It has an EPS of $11, a market cap of $246 billion, and it has a wide economic moat, and the beta is actually just above 1. Now, let me just quickly show you. There's Adobe Fire fly software that they've released recently, where you can actually give like a description of what you're looking for, and the generative AI will generate the product for you. So that's basically now how they're utilizing AI. That's something new, that's something exciting about the company. So they are in the AI, of course everybody's trying to do that, but I think this company will actually probably be benefiting a lot from this, because their product has been actually quite static for the last few years. So now that having that is actually quite good. Now current PE is 47, the forward PE is 33, and the 5-year average is about 40. So based on the 5-year average, this seems a little bit expensive, and based on the overall market right now, it actually seems quite expensive. Price to free cash flow right now we're looking at about 32, and PEG ratio just basically above 2. Now in terms of cash, they have $7.63 billion, free cash flow margin of 40%, and free cash flow yield of 3%, which is basically normally what we're looking for. Profit margin, operating margins, return on equity, all of that company is absolutely amazing. Total return in the last 10 years, if you had this company, 26% with every single year, which is absolutely amazing. Return on invested capital, 25%, 26%. And when you look at the last the revenue growth side of things, we're looking at about 19% in the last 5 years. Current ratio is above 1, which is what we're looking for. In terms of growth estimate for the next year is about 13%, then about 15%. Current price for the stock is 521. Simply Wall Street is actually saying it's undervalued by 19%, almost 20%. They're expecting the price to be $675 per share right now. Morningstar is saying it's not too expensive actually. It's about 6% premium right now. 510 is their price target. According to TipRank is actually saying 600, and according to Seeking Alpha is also 581. So kind of similar. So a buy again, a moderate buy, basically 20% discounted, 6%. So overall, it seems it might be a little bit overvalued, maybe undervalued. According to PE, definitely overvalued right now. According to these analysts, they're saying, okay, it's okay to buy right now. I'll tell you exactly what I'm going to do with both companies in a second. But before we do that, let's look at the Sharia compliance side of things. Basically almost in terms of business activity side of things, no issues. Interest bearing debt, no issues. Security, interest bearing securities, no debt, no problem there. And shares outstanding, as you can see, has been declining in the last basically 10 years, which is absolutely beautiful to see, because the company does not actually pay dividends. This is absolutely wonderful. Now, one basically problem I have with this company is now they have $7.6 billion of free cash. They are acquiring Figma for $20 billion. I don't know if what's happened to the deal, if they're still on it also. But that means either they have to use stock to buy it, or get basically interest, or get basically cash from the bank, which is not great right now because the interest rates are very high right now, but they don't have enough cash. So one of the reasons I sold quite some time ago for the stock was because of that uncertainty. Okay, and I think they could do with that with Figma. Figma is a great company. They have a similar sort of product, but that worries me a little bit. So for that reason, I'm not buying Adobe anytime soon. If the price maybe drops, I don't know, maybe another 20%. Maybe even if it gets to 410, 420, whatever, right, then maybe I might start looking at it. But right now, I wouldn't touch it. It seems very expensive. However, this one, I do own it in the family portfolio. Okay, very small shares, however I do own it. I've been buying it for the last couple of months, and I'm going to continue buying it because of course the intrinsic value based on these two companies seems is basically undervalued at the moment. As well as that, I've actually started buying it when it was below 200, so I'm going to continue buying that inshallah in the next few months. And I really like the business model. They are the company when it comes to all the things that we talked about early. Okay, and they have loads of products that are used in basically all sorts of industries, within the design, within architect, within engineering and so on. So I'm going to continue buying this company inshallah. And just to be transparent, this is definitely one I own right now, and I don't own Adobe. Used to own it, I sold it. If you're enjoying the content, please join us on the Discord, join us on the Patreon account, like the videos. 50% of you guys right now are not subscribed to the channel, so please join us on the YouTube side of things and subscribe to the channel inshallah. Have a wonderful day. Assalamu Alaikum.